Have you ever wondered how truly massive wealth is created and just how quickly, we're not talking about gradual accumulation here, artificial intelligence, well, it isn't merely reshaping technology. It's fueling this extraordinary wealth creation spree, really unlike anything we've witnessed before. Today, we're exploring how AI is minting new billionaires at, well, a record pace.
Exactly. And to guide us through this, we've been immersing ourselves in a really fascinating article from CNBC's Inside Wealth newsletter by Robert Frank, plus some compelling data from CB Insights and Bloomberg. These sources, they really paint a vivid, almost urgent picture of what's happening right now.
Right. So our mission for you today is to unpack the sheer scale of this AI wealth boom. We want to pinpoint who's benefiting, where this wealth is concentrating, and, what it all means for the future of finance and maybe beyond. Okay, so diving deeper into this phenomenon. The central idea that's really emerged is how rapidly the AI boom is becoming the largest wealth creation spree in, well, recent memory. It feels like a monumental shift, doesn't it?
It absolutely does. The scale is truly historic. Andrew McAfee, a principal researcher at MIT, he put it perfectly. He said, going back over 100 years of data, we have never seen wealth created at this size and speed. What makes it so distinct isn't just the sheer volume. I mean, that's huge. But it's how incredibly fast this value is being recognized and sort of consolidated in a few hands. It's fundamentally reshaping our economic landscape in real time.
Yeah, and it's not just about a handful of, hot AI startups, is it? We're seeing this wealth creation span across soaring stock prices of publicly traded firms, AI-related ones like NVIDIA, Meta, Microsoft.
Gamers.
Exactly. And it includes the infrastructure companies, the ones building the essential data centers and computing power, and it even extends to these huge payouts for AI engineers. It's a broad systemic shift, really.
Now, when we talk about this wealth creation, my initial thought often goes straight to, soaring stock prices, public markets. But is that the full picture? Or is there another major driver here that's perhaps less visible? That's a crucial point, yeah. While public markets are certainly hot, a massive portion of this wealth, it's heavily driven by private companies. This phenomenon of private AI companies is, well, it's quite remarkable. According to CB Insights, there are now 498 AI unicorns. Private AI companies valued at $1 billion or more.
498.
Yeah, and their combined value, $2.7 trillion. What's even more staggering, though, is that 100 of them were founded just since 2023.
Just in the last couple of years. Incredible.
It is. And beyond that, there are over 1,300 AI startups with valuations over $100 million. So it's deep.
Okay, let's try and bring these numbers to life a bit.
Right.
Bloomberg estimated back in March that just 4 of the largest private AI companies had created at least 15 billionaires. Combined net worth, $38 billion. And get this, more than a dozen new unicorns have been crowned since then.
Since March.
Yeah. Take Mira Murati, for instance. She left OpenAI, launched Thinking Machines Lab, raised an astounding $2 billion in what was the largest seed round in history. Seed round. By July, that gave her company a $12 billion valuation.
Unbelievable start.
Then there's Anthropic AI. They're in talks to raise $5 billion at a valuation of $170 billion. There's nearly 3 times its March valuation. Makes CEO Dario Amodei and its 6 other founders likely multi-billionaires.
Just like that. Paper fortunes, but massive ones.
And maybe even more mind-boggling is AnySphere, valued at $9.9 billion in a June fundraise, then reportedly offered $18 billion to $20 billion just weeks later. Weeks. That likely makes its 25-year-old founder and CEO, Michael Truell, a billionaire at 25.
25? Wow.
And let's not forget OpenAI itself. They're holding talks for a secondary share sale, right?
Yep.
To provide cash to employees. The proposed valuation, $500 billion. Following a $300 billion valuation fundraise back in March, then numbers are just dizzying.
They really are. And what's truly striking here is the sheer velocity. The speed at which these paper fortunes are accumulating in the private sector. It's an unmatched pace. And it doesn't just speak to intense demand, right? It also speaks to a market willing to assign these multi-billion-dollar valuations to companies with, frankly, relatively little revenue sometimes. It's based purely on future potential, which is a significant departure from how traditional tech booms often unfolded.
That's a fascinating distinction.
Yeah.
But with so much wealth tied up in private companies, what are the mechanisms for these founders and, equity holders to actually access that capital? It feels like a very different landscape from the dot-com boom, doesn't it? Back in the late 90s when companies just rushed to go public.
Precisely. Today's AI startups, they can afford to stay private for longer. There's just this constant investment flowing in from VCs, sovereign wealth funds, family offices. those private wealth management firms for the super rich and other tech investors too. There's simply less pressure to go public immediately just for capital.
Ah, okay, so if they're not going public right away, how are they turning these paper fortunes into real liquidity? Are there solutions emerging that maybe weren't as common before?
Absolutely. We're seeing this rapid growth of secondary markets. They're stepping in to provide that uh, much needed liquidity. Things like structured secondary sales or tender offers.
Hmm.
They're becoming widespread. They allow equity owners to sell their shares to other investors even while the company is still private.
Ah, okay.
And for those who don't want to sell outright, founders can also borrow against their equity, so they access capital without giving up ownership yet. It's a very clever workaround.
And we've already seen concrete examples of these liquidity events happening.
Yeah.
You mentioned dozens of private firms being acquired or merging, like 73 liquidity events since 2023. M&A, IPOs, reverse mergers, corporate stakes.
Yeah, the activity is high.
A notable one was Meta's $14.3 billion investment in Scale AI, after which founder Alexander Wang joined Meta's AI team. And get this, Scale AI's co-founder, Lucy Guo, who actually left the company way back in 2018, she recently bought a $30 million mansion in LA's Hollywood Hills.
30 million. Wow. From
Sure.
shares she held from years ago, presumably.
Must be. That's a serious upgrade from, the typical startup founder's digs. Makes you wonder what kind of smart home features an AI co-founder puts in a place like that, right?
Probably runs the whole house itself.
Probably. So this incredible speed and scale,
Mm-hmm.
it brings us to a crucial question. Where exactly is all this wealth landing geographically?
Yeah, that's really interesting. It's truly remarkable how geographically concentrated this AI wave is, especially in the Bay Area. It's highly reminiscent of the dot-com era in that respect, actually. Andrew McAfee observed this too. He said, it's astonishing how geographically concentrated this AI wave is. I've heard people say for 25 years, this is the end of the Silicon Valley, or some other places, the new Silicon Valley. But Silicon Valley is still Silicon Valley.
Still Silicon Valley.
It really speaks to the kind of enduring power of these established tech ecosystems.
And that concentration, it's backed up by some pretty compelling data. Last year alone, Silicon Valley companies raised over $35 billion in venture funding. $35 billion. And get this, San Francisco now boasts more billionaires than New York City. 82 compared to New York's 66.
That's a shift.
Huge shift. The Bay Area's millionaire population has doubled over the past decade. Doubled. That utterly dwarfs New York's growth of 45%. And you can see the impact on the ground, right? More homes sold above $20 million in San Francisco last year than in any other year in history.
There's million-dollar homes.
Yeah. Rising rents, home prices, overall demand in the city. It's largely attributed to AI now. It marks this sharp turnaround for a city that, was facing talk of a doom loop just a few years ago. So despite all the talk of remote work, it seems physical proximity still matters enormously for this kind of innovation and wealth creation.
It does, and it raises an important question, really. Why does this gravitational pull to Silicon Valley persist, even with all these other emerging tech hubs globally? It suggests that the unique density of talent, capital, and maybe that specific risk-taking culture, it still provides an undeniable advantage that's just difficult to replicate elsewhere.
So looking ahead, with time and eventually, initial public offerings, many of today's private AI fortunes will become more liquid. So what does this extraordinary influx of new wealth mean for the established wealth management industry?
Well, if we connect this to the bigger picture, this represents a truly historic opportunity for wealth management firms. All the major players, private banks, the wirehouses, the big brokerage firms,
Right.
independent advisors, boutique firms, they are, frankly, cozying up to the AI elite, hoping to win their business. They see the immense potential down the road.
But there's an initial challenge here, isn't there? Because it's mostly paper wealth for now, as Simon Krinsky at Pathstone put it. I would say a much higher percentage of the ultimate wealth being created is illiquid. That illiquidity must make it harder for traditional wealth managers to immediately, take on these assets. They need to be adaptable.
That's a crucial point, yes. But when these fortunes do become liquid, the AI wealthy are likely to follow patterns similar to, say, the newly rich dot-comers of the 1990s. Initially, what did those dot-commers do? They invested their excess liquidity and assets right back into similar tech companies, companies they knew through their networks, their colleagues, shared
All right,
investors.
invest in what you know.
Exactly. As Krinsky noted, everybody turned around and invested with their friends in the same kind of companies that created their own wealth.
We saw examples like Netscape founder Jim Clark, who even helped launch MyCFO as a direct response to his dislike of bankers and the traditional industry.
Yeah.
It really mirrors that dot-com era, these overnight millionaires initially just wanting to double down on what they knew best. So we might see today's AI entrepreneurs doing the same thing. Maybe even creating their own AI-powered financial tools to manage their wealth, initially bypassing traditional advisors.
Exactly. That's highly possible. We might even see AI tools disrupting or perhaps replacing many traditional wealth management functions, at least at the sort of entry level. Ultimately, however, the ultra-wealthy AI founders, they will almost certainly discover the need for the traditional personalized service, the kind that only dedicated wealth management teams can really provide.
For the complex stuff.
Precisely. We're talking about complex areas like taxes, inheritances, estate planning, philanthropy advice, sophisticated portfolio construction, things AI might assist with but can't fully replace the human touch for, especially at that scale. Krinsky anticipates this too. He stated, after people were beaten up or bruised up in the early 2000s after the dot-com crash, they came around to appreciating some degree of diversification and maybe hiring a professional manager to protect them from themselves. Wait, I anticipate a similar trend with the AI group. It took a few market corrections for some to truly appreciate the value of diversification and professional guidance. History often rhymes, as they say.
Okay, so we've explored the extraordinary scale and speed of AI's wealth creation. It's truly astounding. And how uniquely concentrated it is, both geographically in places like the Bay Area and within these private companies. This truly is a period unlike any other, minting billionaires at a pace we've just never seen before.
It really is. And maybe a final thought to leave you with, considering the lessons learned from past tech booms, what new industries, philanthropies, or even societal shifts might be sparked when this enormous, currently illiquid AI wealth fully floods into the mainstream economy? And, how might that ultimately impact you?